and where it potentially sets us, if you like, moving forward?
Well, the interesting thing was with after that 11:30 rates, 11:30 RBA minute meetings that came out, we did see the market trend higher, as Michael mentioned. But if you look at the action in the Aussie dollar, I mean, the equity market was sort of suggesting it liked the minutes. There could be further rate cuts coming as soon as next month. But you look at the Aussie dollar, there was a slight easing, but really no big moves there as well. It didn't move down below the 104 level. It just sort of held steady throughout the day. So that was an interesting one on the market today. But I think certainly the leads from the US, it was disappointing to see our market only move that much higher, but I really think that the rally on Wall Street last night was possibly well overdone. There was certainly that positive US housing data which helped the US market move higher. Certainly the US market has been sold off more heavily than the Australian market in recent times, but it's hard to see that just some comments from the President, some good sentiment flowing through from the end of last week about some constructive talks about the fiscal cliff, really to drive the American market 2% higher overnight. I think that we haven't seen the lows for the American market this year.
Virgin had their AGM today up in Brisbane. Worth noting as well, we'll be hearing from John Borghetti a little bit later in market day. It was an interesting sort of tone coming out from Virgin. They have been fated of late, particularly Mr. Borghetti's leadership, but today maybe things turning a little bit sour, particularly in regards to their share price. Fell by about 3%.
That's right. I think shareholders should have been fairly happy going into the meeting, given if you look at year-to-date performance of Virgin, shares are up 69% since January this year. But as you said, the shares did fall 3% today. They didn't give any outlook guidance. They said that the outlook is still uncertain, but that's certainly true of the airline industry. It's a very, very volatile market in the airline industry. But they do expect improved underlying financial performance moving forward through the financial year 2012 to 2013. But certainly what we have been seeing in the domestic airline market is very intense competition recently. Virgin is at the moment sort of undertaking the start of a significant turnaround strategy under that CEO who started back in 2010, expanding their corporate and government sectors as well as within the regional and international markets. Recently we saw that 60% takeover bid for Tiger and a complete takeover bid for SkyWest Airlines. For the Tiger Airways, they're looking to increase their footing in the budget airline space domestically, and with SkyWest there's a $1.3 billion regional segment as well as a fly-in fly-out segment that they're targeting. And I think moving forward at the moment for Virgin, the market will be very much focused on these few deals that they're planning, and there may not be an outcome from the ACCC until March or April 2013. So the share price of Virgin may well just sort of bide its time until there is a significant outcome in terms of their strategy. But given their year-to-date performance, I think the positive outlook that the market seems to have had with Virgin, and given its turnaround strategy, a lot of this could have been priced into the market, into the share price already.
Revenues looking like going to continue to grow, and comes interestingly, and it may be a little bit unfair to Boart Longyear, but coming just a day after, well, we saw what happened with Boart Longyear. What was about second downgrade in some 3 months.
Well, that's right. Monadelphous is looking very positive moving forward now. The stock rose up over 6.5% today. They're expecting first half revenues to December to be up around 40%, and full year to June 30 revenues to rise around 25%. And this is being driven by new record levels of work contracts that they're achieving at the moment. Now they provide construction and maintenance services mainly to the resources sector, so they're very much driven by investment and capital expenditure within resources and mining, but particularly in oil and gas, which has been a big driver for Monadelphous recently. Some $650 million in revenues just from the Pluto LNG project. And potential new project pipeline it looks like it's continued to be strong over the next couple of years within oil and gas. Around $7 to $13 billion in new work is going to be awarded within Monadelphous's core competency areas, and they're very well placed to win a significant portion of this new work. Of course, there are significant risks for companies like Monadelphous who service the mining industry, failure to win contracts and delays on contracts, as well as cost blowouts, and of course downturns in the resources sector in general and how much investment is being put in there. But certainly a positive. There's been a lot of analysts that are very positive on this stock. It's traded sort of in a bit of a range-bound fashion over the past year or so. But if we have a look at a chart at the moment of Monadelphous, you can see here that just today it's broken out of what looks like a triangle type pattern on the charts, indicating some upside potential there.